Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are largely quiet in today's trade. We have the Bank Nifty, which is under pressure, but it has recovered from the day's low. We have the mid-cap index, which is managing to hold up in the green, so up around 0.3% currently for the mid-cap index. IT stocks continue to be in focus post Accenture, so that continues to be one piece of news which dominates in today's trading session. For the Nifty as a whole, is just about consolidating with a negative bias, so down around 0.13% for the Nifty and 0.2% for the sensex. Well, joining us today, we have Shahina Mukadam, who is an independent market expert, and Vaishali Parekh, head of tech research at Prabhudas, Lilladher, to answer all of your queries this afternoon. Shahina as well as Vaishali, welcome to the show. Well, Vaishali, let's start with you in terms of the technicals of the market. It's quiet today. It's been, just about a marginal gain on the indices on a week-to-date basis as well. How would you approach today?
Very good afternoon, ladies. Yes, actually, market has been very good. In fact, I would say on a weekly basis. And we were expecting Nifty to go towards 23,700. So we were pretty much there. So I think now it is consolidating. And Bank Nifty also we were expecting 52,000. So that's what we did. Today's high was also somewhere near 51,900 odd. So I think the target levels, and as far as the indices is concerned, it has been met with. Now it comes to consolidation phase, but stock specific movement still continues. So that is how we would be looking at the market now.
Okay, all right. Well, let's get in some questions now. We have Arunchala Balaji, who writes to us from Tamil Nadu, holds around 2,000 shares of Utar Small Finance Bank, which is bought at around 55 rupees per share. So she's just about, breaking even. Wants to know the future prospects of his investment. Well, Shahina, what would you recommend on this particular counter? Just about breaking even. Do you think that there's further upside from these levels on a fundamental basis?
Well, I would say that the upside will be limited, at least for the medium term. The reason being, it's, I think, just about a year or slightly a few days lesser than a year when the stock initially listed. And as you're aware, it was a very, hyped up IPO. It got something like 100 times subscription, and it listed close to the current levels, which it is today. And it didn't really perform after that. So the investor has gotten at higher levels. And if you look at it, even for the medium term, while they are doing well because they are microfinance, bank, which they have presence in UP, Bihar. So these are faster growing areas in terms of credit. At the same time, if you see the last year's performance, like FY24, naturally it would have been, benefited by the funds that they raised via the IPO. So going forward, I think there is likely to be some bit of a consolidation in terms of both their financials as well as their stock price. So for the shorter term, I think there are better stocks available with a similar valuation. Like price to book for Utkarsh is now close to about 1.7 times book. So there are other banks which are available, larger banks, which the investor can look to switch. So I would prefer that she switches at current levels to some other maybe private sector bank that would look better for the medium to longer term.
Okay, all right, fair enough. Well, this year itself has not done much. Technically, how would you approach this stock, Vaishali?
Yes, so I would say there's hardly any trend. I mean, the stock that we don't see a real, of course, the data is also quite limited as compared to the other stocks. So I would say there is nothing really happening. The stock has a range of 48 to around 53, 54. Unless and until this stock moves past 54, 55, we can expect a target of 60 to 62. In that case, I'd rather suggest if time is the factor, then we are already in a good strong trend in the small size banks like City Union or Bandhan Bank. Those are the banks which are likely to give you a faster return. So I would say you rather switch to these banks as compared to Utkarsh Bank.
Okay, fair enough. Well, we do have another query now. We have Pallavi, who writes to us from Chennai, holds 20 shares of Happiest Minds, which he's bought at an average price of 14.26. She's a long-term investor. wants to know what to do, whether she should book her losses or probably stay invested. This is a tough call on, on a stock such as Happiest Minds. So let's get a fundamental view in first. Shahina, what would you recommend? Do you think that there could be some amount of turnaround when it comes to the stock performance?
I think, this stock is likely to continue to see some bit more of consolidation in the medium term. So here again, my recommendation would be to switch. There are a couple of factors going into this recommendation. One is, of course, the IT sector as a whole. We are going to see some bit more, time before we see the demand actually come in back for the overall sector. That is one. Second is valuations. If you compare it with some of its other peers, it looks expensive at current levels. If you look at the PE multiple, it's 32 times FY26, which is expensive. Even if you look at it from some other parameter like EV to turnover to market cap, there also it's expensive. It's about 9 times. So there are other quality stocks which are available at a more reasonable valuation. While if you are a long-term investor and you have invested at low levels, then yes, there are a couple of upsides because it is done pretty well in getting market share in digital, and I think it has, or it is planning to make more acquisitions in the BFSI space, which actually could see it grow better over the longer term. But as of now, the financial performance is also a bit subdued, so I would switch.
Okay, you would switch. What about you, Vaishali? Technically, how would you approach Happiest Minds?
So I would say actually to start with, the whole IT index is showing signs of recovery and signs of reversal. Now talking about Happiest Mind, I mean on a daily chart also, if I'm looking at it, the stock did make a bottom at around 800 levels and now it's getting into a trend. Even the weekly chart, what I'm seeing is it has after a very long time come above a cluster of moving averages. So that implies that this stock is ready to now give a good bounce back. So I would wait and watch. I mean, if he has bought, I would rather say average out even at these levels. Because once the stock, because we've been seeing an improvement in the volume also since a couple of days. So if the stock moves and sustains about 950 on closing basis, I think this is ready to go towards 1200. So no harm averaging the price right now, so you can lower the cost price.
Okay, all right. Well, we now have Sahil Shirke, who writes to us from Mumbai. He has an investment query as a whole. He wants to invest in PSU stocks and is asking which one he can buy. Well, that was and continues to be the flavor, Shahina. It's broken up into various categories as well in terms of what you can invest in when it comes to the PSU space. What would your recommendation be if you had to pick out one stock and if you had to pick out a portfolio?
Ekta, this is a very difficult question because, PSU stocks, they weren't fancy for some time back. They have rallied such a lot that for me to give a fundamental call in basis of earnings, it's become very difficult. At the same time, so I think the best way to invest in the PSU stocks at current time frame, because what has happened is they're so expensive that it's better to buy a portfolio of them, do something like an SIP, and there you have a couple of sectors which have done very well, which have been multi-baggers last 1 year, but I believe if you again hold it for 2 to 3 years, they will give you decent return. So the top of the list in sectors would be, of course, defense. Like something like a Hindustan Aeronautics, something like a BEL, very expensive at current levels, but like even I have invested in HL at much lower levels, and I would probably continue to hold, though I think it's a bit expensive because the order book is so substantial and it's likely to continue going forward. Second sector, of course, is the banks. If you're looking for PSU space for investment, I think SBI tops the list for banks. And then you could look at some of the others, maybe something like a Canara Bank, which their valuations are still not too aggressive. So you could look at something in banking. Then another sector you could look at, in my view, something like a shipyard building. There again, the stocks have run up a lot. But I think something like a Cochin shipyard, I used to like it at much lower levels. I still continue to like it for a medium to longer term, given the fact that they have huge order book. The sector is going to do well going forward.
Okay. All right. Well, anything within the PSU space that you like? Technically, Vaishali, I know it's a broad question, but anything that you are tracking within the space?
So I would say I would go sector-wise. Actually, even if you see in the metal sector, whole of metal sector is doing well. So I would put my thoughts on SAIL, Steel Authority of India, because I think still there is a lot of further upside. I would choose Hindustan Copper also as a SIP strategy. Besides that, well, as Shahina mentioned, even in defense, so BHEL, BEL, they all look good even. I mean, but at this juncture, when market is already at 23,500 levels, I would say it is always better to start accumulating at every dip from here on, because at some point or the other, we are definitely going to see some corrective move coming in. So the ideal way would be, considering the long-term trend intact, we are seeing good hype projected targets in all these stocks that I'm talking about. So it would be better to start accumulating at every dip. That would be my strategy right now in a market condition like this.
Okay, all right. Well, we have another investment query now. Neetu Jain writes to us from Bihar. She says she wants to invest in new age stocks and is asking which one she can buy right now. Well, you know, this is a question which comes up repeatedly on the show, that people are interested in buying a couple of these new age stocks, you know, the Zomatos of the world and the others. What would you recommend, Shahina? Any of the stocks that you like within this entire basket that you would recommend at these levels?
See, I think, you know, the investors, like, for example, in Zomato, which looks good even at current levels for a new age stock, should keep a lookout for some of the IPOs that come out, you know, in the new age space. Like, for example, two-wheelers, electric two-wheelers. There is a likely IPO in the medium term, short, maybe couple of months. So you could keep an eye and, you know, put in money in those sort of IPOs. Also, I think travel is a space where we've seen a couple of new IPOs that have come up, which are doing well, and where valuations, you know, are not that stretched, because I think to an extent it looks a bit stretched, but last year was pretty bad for them. So I think going forward things should look better. So like something like I would say Ease My Trip. That is one of my top picks in the travel space for the new age companies. So you could actually also look at the power space, something like an IEX. So there are a couple of stocks that you can look at even in the current portfolio, and then keep a watch out for the new IPOs that come out.
Okay, all right. What about you, Vaishali? You know, Ease My Trip, Zomato, Paytm, technically any of these stocks?
So Zomato has already done a good run-up, but well, having said that, I think still there is scope of further upside. But yes, I do agree with Shahina on Ease My Trip. I would also look at Paytm now, because that too is showing signs of reversal. So a calculated risk in these stocks should be taken.
Okay. All right, so that's the word coming in on a couple of these new age stocks, as well as queries which we've answered. We need to take a quick break on that note, but a lot more questions lined up on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We have with us Shahina as well as Vaishali Parekh to answer all of your queries this afternoon. Let's get in Unni Krishnan, who writes to us from Chennai now. He holds 200 shares of HUL, which he's bought at around 2,710 odd rupees. He wants to know the future prospects of his investment. So he's currently sitting on a loss when it comes to HUL. His buy price is higher than what he bought it at, than where the current price is. Well, you know, there's been a lot of positivity around HUL, especially post the elections. It was momentary, but nonetheless, there is some amount of, you know, focus on the consumption story, Shahina. So in that context, how would you approach HUL going into the remaining part of FY25? Do you think that it's a long-term buy?
It has always been a long-term buy because valuations are so expensive that you cannot really make money in the over a 2 to 3 year period. When these type of stocks make money, they make it in a quick a couple of quarters, and then they stagnate. The stock stagnates for a long time. So these are stocks which are like portfolio stocks. And even if you look at pure fundamentals, if you look at the earnings, if you look at the profitability, last year was pretty disappointing. Actually, the expectations that were there from improvement in margins didn't really happen. Now, in the current year, we are talking of better monsoons, improved demand from the rural space. So things hopefully will look better. At the same time, valuations are so expensive that the stock could give you returns, which I would say may be better than the interest rates that you're getting. But to expect it to be a multi-bagger for the shorter term or medium term, I doubt. So if she wants to have a fast-moving stock in her portfolio, then she needs to move. She needs to switch.
Okay, all right. Faster moving stock in your portfolio, then you probably need to consider switching. Vaishali, HUL technically?
Technically, I think it is quite well poised, and I think 2350 acts as a very good support. So since you said that this person has bought it at higher levels, I would say no harm again accumulating, keeping in mind 2350 as support, because once we see momentum setting in, we are looking at a target of 2700 to 2900. So that's the way one should go about handling this stock.
Okay, all right. That's any other FMCG stock that you recommend also technically?
So I would say why not Tata? Yes. So Tata Consumer, ITC, they all fall in the FMCG counter, and I think these are all stocks which can give, as far as the risk-reward ratio is concerned, there is a good run-up expected in these stocks. Because if you see in this rally, ITC has just not participated, but technically it is at a good level. So I think at these levels, one should start accumulating, because once the momentum starts, you can get good returns.
Okay. All right. Well, Prasad now writes to us from Bangalore, holds 40 shares of Hero Moto, which he's bought at 4,820. He says he wants to switch to other stocks such as Eicher, Escorts, Kubota, or auto ancillary stocks. He's asking where he can invest. So he's looking to invest in auto stocks, and he has an investment in Hero Moto, which he's making a profit on. Well, technically, let's start with you. Give us a sense, Vaishali, on Hero Moto as well as any other auto stocks that you would prefer over Hero Moto.
I would say that because actually, technically, if you go to see, Hero Moto has seen a one-way run-up. And even on a monthly chart, the stock has got into an overbought zone. So little partial profit booking should not be ruled out. And from here on, I think four-wheelers still has upside potential. Like Maruti, if we look at it, it has still got an upside potential of 14,000, 14,500. And talking about auto ancillaries, I was just looking at JBM Auto today. JBM Auto technically very well placed. I think this can give good returns from here on. Even Uno Minda, what we have been seeing in the past, has run up, but still there is good scope on an upward momentum. So I would say JBM would be a pick right now as far as the ancillary is concerned. And in the front line, I would still choose Maruti at these levels.
Okay, all right. And what about the fundamentals, Shahina?
Well, see, her specific question was whether he should switch to, he's given two specific stocks. So if, Hero Motor Corp, I would say that, yeah, while things are looking much better for the current year compared to what it did last year, though it did well, two-wheelers, rural demand is picking up. At the same time, yeah, I would prefer that he can take part profits, and partly he can switch to, he wanted to switch to, I believe, tractors, yeah, Escorts. So Escorts, Kubota, of the two that he selected, I would prefer. One is that if you see last year Escorts' performance, on a flattish type of turnover, they did a substantial improvement in margins, overall margins and profitability. This was on two fronts. One is because they were able to contain their costs, and two is because of they started exports to their partner. Now, exports to their partner over the next 2 years is going to, increase substantially. I believe by FY26 it will improve it will go up in a major way. So I think this is the stock that over a 3-year period will give you better returns than a Hero Motocorp. So yes, he can switch. Valuations are expensive, no doubt, but if you take a little longer term call, I think I would prefer Escorts.
Okay, all right. Okay, well, we have Hardik Shah, who writes to us from Mumbai, holds 20 shares of BEL or Bharat Electronics, which he's bought at 308. He wants to know whether to hold or to sell at these current levels. So he's just about breaking even on this particular counter. Would that be prudent then to probably exit? Vaishali, on the technicals?
I don't think so, because the trend is really very strong. And I would say that there is still no reversal as far as the indicators are concerned. I think continue holding, and in all likelihood, if market continues to move the way it is, this is ready for a target of 330, 350 to start.
Okay, all right. That's on BEL. It's done well in the past few months technically, but fundamentally, Shahina, how would you be placed on it?
I will agree with Vaishali. I don't think that one should book out at current levels, though fundamentally it is expensive, like, most of the other PSU stocks. They have run up, defense stocks especially. But here, if you look at the order book position, it's almost 35,000 crores. And if and it's a multiple time compared to what its current turnover is. So the growth is, huge growth is possible. I think it's just how much they can deliver, so that over a period of time should improve. Even if you saw last year, I believe on the profitability had shown a good spurt. So therefore, even if the valuations are expensive, if you take a 3 to 5 year view, given the fact that the defense sector is going to continue to do very well, it is a stock that you should hold in your portfolio.
Okay, all right. It's a stock that you should probably hold in your portfolio. Well, Vaishali as well as Shahina, on that note, we're going to wrap up and wish you a good weekend as well. That's all the time that we have on the show. We wrap up with the news that we have a quiet day on our hands. We have the Bank Nifty, which is underperforming. You can always remember, for your stocks, email us your questions. We'll address them with our experts. Closing bell will take you through the last hour of trade for the week.